We're growing a Robinhood account from $0 all the way to 1 million, and I'm showing you every step of the way how I get there. So in this video, I'm going to cover the current account, the positions that we're in, as well as what happened today with the FOMC, with Jerome Powell. Why did the market sell? We just cut rates by 25 basis points, and then I'm going to get into the charts and give you my thoughts of where I think we're headed. So first and foremost, the account, it's been just about a month and a half, and we just cracked $6,000, and we started with $3,000. The gains today were mostly driven by SPY put butterfly spreads that I purchased over the last week. If you watched my last video, I talked about how the market was overextended and we were overdue for a larger correction, and I put my money where my mouth is. I hedged the portfolio because I'm still net long for the long term. We're investors more than we are traders, but I felt like this was a good position to have, as well as Soxel, which is semiconductors, ETF, leveraged. I bought some put butterfly spreads on that as well. So I think that AI and semiconductors are also near a interim top, if you will, just kind of like how electric vehicles topped out in December of 2021. I think we're also at that same stage for AI and semiconductors. They've just been growing at such a fast clip. I think those are all going to have a larger correction in the market with like AMD, NVIDIA, Broadcom. So look out below on those, but they're going to bring a lot of buying opportunities if you've missed out on the runs that they've had. Another thing was Tesla. I mean, this was kind of like a no-brainer to sell call credit spreads, and then just because it's OPEX week with quad witching and Tesla was getting gamma squeezed, it was like on the upper end of the Bollinger Band, and so it had this larger correction to the downside. I probably should have scaled more heavily into these, but I just didn't have enough capital in the account since we're only allowed to deposit $1,000 per month. So I deposited some money there and then bought those call credit spreads, and just going to let those run to expiration to collect the full $105 that we sold those for. It's a nice return overall on the account. Obviously, Neo and Grab, this is like the two positions that we're most bullish in. These have been taking a hit because when the market sells, really everything sells. But I also sold some calls on this because I was bearish on everything, and same thing with Grab to help protect the position. But ultimately, I do think that we'll head lower in the market. So looking at the FOMC, we got the news today. They cut rates 25 basis points. There's only 50 basis points forecasted for 2025 to 3.9%. And really what the market was looking for was the forecast. And the Fed is forecasting that they're going to keep rates higher for longer. And so the market was pricing in lower rates, which is financial easing. But because now they're going to be higher because inflation has been picking up, they're holding rates a bit more steady. You have the big sell-off in equities and risk assets. If you look at the longer run rate, it's around 3% to 2.9%. That's really just where they're ending at here. And then even one of the Fed members was talking about having no rate cut because inflation has picked up in the last couple months. And right now, U.S. rate futures are holding rates in January with a chance of 90%. And all behind this, the Fed is also tightening the balance sheet. And you can see here that we topped it out around $9 trillion, and they've really just tapered about $2 trillion. So they're still tightening in the background, and then they're lowering rates. So they're kind of doing two different things at the same time. But because inflation has been picking up, they are no longer lowering rates. Now, what does that really mean for the stock market? What does that mean for crypto? What does that mean for really everything in the market, all risk assets? Well, that means that everything's going to go down, honestly. The Fed was really hawkish in this statement. They're kind of handcuffed where they can't lower rates more because inflation will start to pick back up, and they don't want that to happen. But unemployment is also creeping up, right? Like a lot of people have been going through layoffs, especially in the tech industry. Unemployment's at 4.2%. The Fed is saying that at the end of 2025, unemployment will only be at 4.3%, which is just not the case, but they have to lie to you because they don't want people to panic. I do think that unemployment will go from like 4% all the way to 6% maybe even more than that. And if it does, obviously we're going to head into a recession, which now, because they're holding rates, I do think that we are ultimately going to go into a recession. There's just no other way around it. We are going to have a business cycle because they can't lower rates to zero. And there's not a lot of liquidity there. And I think that even with Trump in office, unfortunately, they're going to probably try to blame everything on him. And of course, he'll probably just blame everything on the previous administration with Biden. So that's just the name of the game. But nonetheless, SPY did have this large sell-off. It broke out of this wedge. We were loading puts in these areas. And I do think that this will probably act as some level of support. If you look on the daily chart, this is where we bounced from before. This is a decent level of support. But if you look at the volume profile, there's not much support at these levels. Really, all the volume was down here in like 460, even in this like 520 range. So there's a lot less buyers up here. And so we could definitely come down and test some of these lower levels. If I was going to trade this, I do think that maybe we'll bounce tomorrow, but ultimately we are going to head lower in this market. We are going to fill in this gap. It's not a question of if, it's a question of when. We are going to hit this 576 level. That might act as a stronger level of support, and we'll have like what is called a gap fill reversal. We'll bounce to the upside. Maybe we'll fill in this gap a little bit more. But ultimately, I do think we will break lower than that. And you can see here there's a low volume node. This also lines up with previous resistance and support. That will act as a stronger level of confluence and a stronger level, therefore, of support. So I think this is like a good level to, if you're playing puts, you would want to sell puts once you actually get to this level. So like say you were in puts here and you wanted to sell once it gets down to that level. Or you could even buy short dated call contracts and play a bounce. So that's viable. And then some of these other levels I would look out for around 540. That's the target of my butterfly spread that I talked about in my last video. And then of course here there's a gap to fill all the way down to 505. So that would be like a level that I think if we had a recession we'll get down to. And if you just look from like a relative position from where we were at this morning, that's like a 16% drop. That's not even a technical bear market. A technical bear market is once we drop 20% from the all-time highs, the previous all-time highs. And if you look at what that level would be, you're looking at a much lower level, right around 480. And there is a low volume gap there. So it's possible that we could get down here, but this wouldn't play out for probably another year or so. So short term, I do think these levels will be tested. This is my extension target at 540. I hope it can get down there before like February or March. And obviously because the VIX went up 74% today, there's going to be a lot of bouncing both to the upside and to the downside over the coming weeks. It's quite honestly going to be a shit show, not only in SPY, QQQ, IWM, but also your individual stocks, because the market's like an ocean. Everything's going to move together. And you can see here, even with like uptrends, all of these uptrends on the Dow, IWM, the Qs, everything is breaking. So fully expect there to be a nice little bounce there. Maybe this will act as support, but ultimately I do think we're going to break to the downside. Same thing with NVIDIA, AMD, semis overall. SOX actually had a breakout, and then I held on to my put position and actually bought a few more, and then it broke back in. And I do think that we're going to come down at least to this 204, 205 level. And then this would be like my ultimate position to play some call contracts to the upside on semiconductors. So those are like a few things I'm looking at. Obviously Tesla, you know, we talked about how it was breaking out to the upside. It formed like a nice little ascending triangle here, and it had an even stronger push after breaking out of a similar ascending triangle as well. So it had two breakouts, and then this was OPEX week, so it's quad witch as well. So there was like a lot of call contracts coming in for Tesla, and it actually causes a gamma squeeze, because if everybody's buying call options, which are much cheaper than buying 100 shares of the underlying at Tesla, which would be like 44 grand, you're actually able to buy call contracts, and by doing so, the options dealer has to hedge against your position by buying shares of the underlying. But because OPEX is on Friday, those options expire. Those people take profit out of those call options, and then the options dealer sells out of shares of the Tesla hedge that they have. So I knew there was going to be a downward pressure on Tesla. It was also on like the upper end of the Bollinger Band. And so that was a really easy position just to buy, or rather to sell call credit spread around like 500 is what I sold. And so that was a nice little position. Obviously, you could have played puts to the downside and made a lot of money there. On the positions that I'm long, and I'll just leave you here with this. So obviously, I'm long NIO. They have NIO Day coming up. They're coming out with new lines for their cars. They have a good cash position. They're growing into Europe and Dubai and some other places in Europe. So really strong overall like fundamentals, but that does not matter. Like the market is going to continue to sell, and unfortunately, everything is like an ocean in the market, and it'll also come down with it. But I am bullish on this company, so I'm not selling out of my position, but I'm protecting it by selling calls and maybe even selling puts when it's really overextended. Those are two things that I'm considering, and I just want to accumulate as many shares as possible over the next year. And then on the other end of a market cycle, then hopefully everything will push to the upside. Grab, this is one I'm also bullish on. Unfortunately, there's not a lot of volume here. And so I do think that Grab could really come back down to like this $3.80, $4 level. It could even break through here if we went into a recession, and that would be really bad for the shares that I own. But ultimately, because I have that hedge on my portfolio, it will more than cover all the losses that I could potentially have here. So we're kind of playing it a little bit both ways, and that's a good strategy to have when you think things are overextended. And just lastly, this is kind of, if you are playing crypto, I'm very fearful of what crypto is going to do because of this change. Obviously, it just fell under 100K. In my other portfolios, I've actually started scaling into inverse MicroStrategy leveraged ETF to play master crumbling, because the MSTR is not only breaking down, but it's heavily tied to the price of Bitcoin. And crypto is one of the riskiest assets, like obviously a Fartcoin and Dogecoin and all these other coins are going to go to shit because unfortunately there's just not enough liquidity in the market and they're tightening. So I fully expect Bitcoin to come back down and fill in this low volume gap. And so you're looking at 73, 74K as like a potential area that this is going to fall to. And as you know, Bitcoin often in the past falls a lot faster and sharper than most people anticipate. So I'm definitely fearful on crypto. I'm also fearful on Ethereum. And if you look at some of the other altcoins or meme coins, you see that these are not really recovering and they're starting to fall. And ultimately, Bitcoin is going to have a much larger correction. That doesn't mean that Bitcoin might not go up in the future if you're holding or anything like that, but just be prepared for a lot of volatility in crypto and other assets, and just be patient. You don't have to buy today. You can let this move play out, see how the market digests what happened with the Fed today, and then go from there. Just be patient, stay humble, obviously, and I'll see you in the next video. Peace, guys.